Committal Nation, welcome back to the Committal Podcast. I'm your host, Juan Vargas, bringing you yet another awesome guest. Our guest today is Jorge Abreu. And so I'll tell you a little bit more about him. Jorge has been investing in real estate full-time for over 14 years, having done wholesaling and on over 200 properties. So that's pretty amazing. Over 200 properties. He's done fix and flipping over 100 properties. And he's also done development on 8 million plus worth of new construction projects. He's the CEO of Elevate Construction and Commercial Investment Group, and he now has ownership in over 3,200 units, both on the LP and GP sides. In addition, he's also the CEO of JNT Construction, where he focuses on helping multifamily investors with their full renovations. So, Jorge, man, welcome to the show.
Thank you, Juan. It's been a long time we've been talking about it, and it's nice to finally get on your show.
Yeah, it's nice to have you here. So we met, man, when was this? I would say it was about 3 years or so when we met. We met at a conference there in Dallas, and that's kind of how we kind of kicked it off, and we just started to stay in touch. And you know, it's been a good friendship. It's been good to see you evolve and just grow your businesses as well. So, man, you know, tell us a little bit about your background, right? For those of you who haven't heard about him, he has a vast majority of, just a big background in construction and multifamily. He's done a lot of single family, like I said. But Jorge, tell us a little bit about your background. Tell us where you're based, also which market you're based in, and take it from here.
Yeah, so I'm currently based out of DFW, Dallas-Fort Worth area. Originally from South Florida, from Miami. Went to university down in Miami, Florida International University. Got an engineering degree, electrical engineering degree. Went to work for UPS in their engineering department. Kind of knew that's not what I wanted to do, but still followed that path. But started looking more into real estate investing just because as I researched individuals that had a good amount of wealth, a lot of them, the trails came back to real estate. The trails of success came back to real estate. So started doing some single family stuff in the beginning and did enough deals to where I decided to quit my W-2, started doing real estate full time. Since then, that was maybe about 13 years ago till now, the path has led me down to, at some point I decided to open a construction company because I wanted to scale, and we had some issues with some GCs, and I no longer wanted to run into that, so I brought it in-house, and that really helped us to scale. Then started doing third party, started helping other investors with their construction projects as well. And then finally started focusing on multifamily versus single family. And that's when things really started to take off, and really felt I was in the right sector of real estate. And, since then we've focused a lot on true value add deals, using, leveraging our construction company to go in and do the CapEx. And as far as units, you mentioned 3,200 units. 1,720 units are on the GP side, and then I've got 1,400 plus in passively. So I first started investing passively in multifamily because I wanted to get a feel for it, see how other sponsor teams handled their investments. And one thing I noticed was, again, the CapEx due diligence part of it. I felt like that was really something I could bring value to with my experience in construction.
Got it. Yeah. So you have a ton of experience, starting with the single family. Did that kind of help you and, in transitioning over to the multifamily? Was there anything there that kind of helped you there as far as the construction was concerned?
Yeah, I mean, absolutely. It's that's where I created my systems as far as the construction company, how to handle subcontractors, how to handle schedules, how to do correct estimates and due diligence, etc. It all came from that. Obviously comparing a single family project to a multifamily project, the numbers are a lot bigger, and there's certain aspects that you need to look for in multifamily versus single family. But overall, it gave me the foundation to do that in multifamily.
Got it. So I want to focus a little bit on your construction company. So JNT Construction, you currently help other multifamily investors with their renovation projects that they have ongoing. Let's talk about that for the next few minutes. Which type of projects do you guys focus on? So like size, markets, what don't you guys focus on, right? There's a lot of pieces to it. There's a lot of moving pieces. There's subcontractors that you can, maybe hire out or you can maybe do it in-house. Let's talk about that a little bit more. That just for the guys out there, they can understand what your company focuses on. And if they need help down the road, if they have any questions down the road, then they have someone that they can reach out to.
Yeah, I mean, our main focus is taking on the full CapEx project, taking that part of it off the hands of the investor. And what we supply is one, depending on how early we get in, if we get in early, we can give them, the investors, a really good estimate on what it's going to cost, so that they know this going in, versus what I've seen a lot is a lot of guesswork goes into that part, and then they close on it and it takes a while to get started. Well, if you come to us early on, we'll have all that figured out so that you can get started right away. Day one, you know what your plan is, you know what it's going to cost. And then we really focus on good communication throughout the whole project, so that the investor, one, doesn't worry about it. They see our constant daily logs and pictures and videos and updates, and they can take some of that and just send it to their investors as well, which is pretty helpful. And then so that's our main focus, doing the full project. But at the same time, if we're working on building a relationship with a new investor, we can come in and do sections of it. It does have to be, a significant. We most likely won't come in and do, $30,000 worth of work or something like that. It needs to be a significant amount of work for it to make sense for us to mobilize and, assign a project manager, assign a site supervisor, and all those kind of things. But yeah, I mean, and I think that pretty much covers it.
Okay. So you guys do from roofs to exterior renovations, to parking lot repairs, to interior renovations, assuming that those interior renovations are in bulk, right? So if I have, say, 5 units and it's, I'm spending 10 grand per unit, right? So that's 50 grand. That's a little higher than your minimum that you kind of said. It's still only 5 units. Is that something that you would be open to doing, or is it more like, hey, let's do 20, 30 units, and then we're going to focus on your exterior as well?
Yeah, I'm glad you mentioned that. That's one thing I did not mention. Interior units are probably the most difficult from anything when it comes to multifamily. It's a lot of scheduling. There's not a lot of profit in doing those. So to answer your question, yes, for us to come in and do the interior units, it would have to be a bulk amount of units, and not really and a decent upgrade. Not just a simple make ready like that. We won't be your solution for that. But if you're doing, if you're putting 7,000 to 10,000 into each unit, or maybe even 5,000, depending on how many units there are, we can step in there and help.
Yeah, and that's one thing that I have noticed as well. It's not worth it for you guys to come in there and just do a few units, right? You guys have to come in there and do mini units. A lot of these you can do in-house. Just they're easy make readies, just easy turns, right? Once you're starting to do bulk units, then that's when you guys it's worth your time to go in there. Let's talk about the exterior. What don't you do? You said you do pretty much everything. Is there anything at all that you don't do, that you don't cover? Do you have to maybe have a third party come in to take care of?
There's nothing that we can't manage. Some of the stuff will be done with a subcontractor, but I mean, we would still manage it. And there's not one thing I can't think of that we can't handle.
What about the markets? Which markets? You're based out of Dallas. I would say, the majority of your projects are going to be in Dallas, or in Texas. Even I know that you also have projects in Oklahoma. So maybe those two markets for sure. But are there any other markets? Are you more of a national or just regional? Try to keep it between Texas and Oklahoma. What's your strategy there?
Yeah, I mean, we continue to grow. As of right now, you hit it exactly. We're anywhere in Texas, anywhere in Oklahoma, we're geared up to cover. Now, if somebody was to come to us with a large project somewhere else, we're definitely open to it. We've come up with a good system of mobilizing and making it happen. As far as if we had to travel, but yes, right now Texas and Oklahoma. But if somebody had a large project, I mean, we'd definitely be open to looking at it.
Got it. Okay, good. So let's shift gears a little bit here, George, and let's talk about the multifamily investing side, right? You're currently involved in. Actually, you just closed on a large deal, portfolio deal in Houston. So let's talk about that one a little bit, because I know you have another one that you're working on. But let's talk about the Houston one that you closed on. Actually, it's been a few months now. So let's talk about that process. Kind of walk us through that, because this is a large deal and there's a lot of moving pieces to it. And it's scary when you're thinking of that many units all at one shot, right? How many properties it was over the portfolio, and then just the amount of capital that you had to raise, and just the renovations that you're going through currently, because I've seen a lot of your activity going on right now. So let's kind of back up a little bit and start from the very beginning, how you found or came across the deal, and then how you took it down, and how you are to today.
Yeah, no, absolutely, man. Obviously it's in your backyard in Houston. It's five properties, 1,275 units. This was not our first deal. We had taken down a couple deals before this, and then even with the deals we had taken down, we were not geared up to go after this by ourselves. So the reason we're able to take this down is we brought in a co-GP that I can't say I met through. It was a friend of mine that I had known since high school, actually, and then through attending networking events, we hadn't seen each other for years, and I came across, actually at IMN, I believe you were there. Not this last IMN, but the one before. So we reconnected. We both knew we were doing real estate. We had no idea that we were both in multifamily. The company he was working for was going after portfolios. They had over 10,000 units already under management. They had done some portfolio deals and exited on a couple of them. So as soon as we connected there, they were looking for somebody to be kind of boots on the ground, find another portfolio for them. And we did just that. We started looking for those type of deals, and we came across one within a couple months, which is this one in Houston. Built a good relationship with the broker. Did not submit the highest offer, but we proved with our track record and our co-GP's track record that we were the best fit, and we got awarded the deal. And then came the fun, which was getting the deal closed. This was total cap, I believe around 90 million or so. Our raise was our equity was 22 million to bring into the deal. So, how we tackled that 22 million is we went after some of the institutional or large equity checks, and we were able to secure a $10 million one. So that lowered it to $12 million that we had to raise. And then between the co-GPs, we were able to do that. There were some obstacles. I don't know if you want me to go into that, getting it closed.
Yeah, I mean, whatever you feel comfortable, discussing. I think, if it got value to our audience, and whatever you feel comfortable discussing.
Yeah. So bringing in the big money check, the $10 million. that was a preferred equity piece, and the biggest.
So what does that mean whenever it's a preferred equity piece? What does that mean for those of the audience members that are listening and don't understand what that language means?
Yeah, so there's a preferred rate of return that they receive that rate before anybody else gets paid in the deal. And there's different ways to work that out. In this case, it was an 8% preferred return. So any profits that come from the properties, they get paid their 8%, and then it gets split. I believe on this one, it's I want to say 70-30. Can't remember the exact structure. And then, so the issue we ran into, which was a couple days before we closed, was our debt was not liking the wording between our agreement with the equity, and the attorneys kind of got into it. Pretty much your equity can't look like it's a loan. You know, they don't want a second loan on the property. It's got to be equity. So there was some wording that they had to change, and they ended up working it out. But it was a bit scary, you know, a couple days before closing, and you may lose out on $10 million. That would be a little difficult to raise in a couple days.
Yeah, and so what you're referring to here is the lender that you had secured for the deal, the one that's providing, you know, 70 to 80% of the capital stack to the deal. They didn't like some of the language that the preferred equity group had in their agreement with you, and so to them it looked like it was like a second mortgage, so to speak. But so they wanted for them to change the terms and make it look like it was more equity versus debt. Is that correct? Is that summarize the issue that you ran into? Yeah, and so I can see how they can, you know, if they're having trouble coming to an agreement and you're getting ready to close, and usually this happens like right around closing is whenever the attorneys get involved, and it's always around closing. So this is always a scary time, right? If you're bringing like a preferred equity group or somebody in that sort that's writing one big check, and you know, so you got to make sure that everybody's aligned. And if they don't get aligned, then yes, they may have to drop out. The preferred equity group may have to drop out, and that leaves you with the big hole of having to raise another $10 million in just a few days, right? So that's a good lesson. So I guess the lesson here was that they were able to come to an agreement. And then everything was smooth sailing from there. Is that something? That's
correct. Yeah, that's correct. And we closed on it. It was around end of November that we closed on it. And then it was time to, you know, execute the business plan, get the CapEx completed. This was a $10 million budget for the CapEx. So we are now in May, and end of this month, we should be completed with all of the exterior CapEx and just focusing on the interior units. So, you know, that took, I guess one thing I did skip was the due diligence. You know, the due diligence on its own, 1,275 units was, I don't want to say a battle, but
how do you manage that? Like this, a lot of units that your teams have to. So one thing I do want to ask you is, was that something that you hired? Well, I mean, you had to hire somebody, right, to help you with the due diligence? Because it wasn't like necessarily your team that went in there and did that. It was a third party that you hired to go through all the units within a certain period of time?
No, it was our team. It was your team. Oh, wow. Yeah. Okay. Between nice. Elevate and I guess you could say that, so JNT Construction was part of it as well. So yeah, I guess in a sense we did kind of hire JNT Construction help, but yeah, between JNT, Elevate, so our two companies, and then our co-GP, Zadik Management, which was bringing in the management in-house. There's about 15 of us on site, and it took us a week to walk all the units. And then we did have some professionals come, like a licensed plumber and foundation company, to check on those things. So it takes a lot of planning. To answer your question, you know, how do you tackle 1,275 units? A lot of planning and executing it efficiently. we used a software to keep everything organized as far as the interior units. And
what software was that? Is that your
HappyCo is the name of the HappyCo.
HappyCo?
Yeah, Happy and then CO.
Happy and then CO. Okay.
Yeah, it's I don't want to say expensive, but I mean I think it's worth it. There's a couple of them out there. This one seems to be the most modern looking and easy to use. But at the same time, it's only as good as what you plug into it on the back end. So as far as numbers, like if you wanted to spit out accurate numbers, then you've got to plug in those numbers on the back end of it. So I don't know. That's
yeah. Okay. Good. Yeah. That's something that's not everybody doing on a daily basis. 1,275 units. A due diligence, and it takes you a week to complete. I mean, that's having to go through all those units. Within a week, that's quite a bit of units. We're used to doing 100, 200 units, a little over 200 units, and even that takes a while, right? So I can just imagine so many times larger than that. So, okay, great. So then, from the due diligence, let's talk about a little bit more on the construction, right? You said that we're in May now, and you're pretty much, you're going to be wrapping up the construction. Why did you focus on the exterior versus, doing the interior, starting with the interior, and why did you do it in that order?
Well, not necessarily that order. It's, we've been doing the interior units as well. I'm just...
Oh, have you? Okay.
Yeah. It's just obviously easier to wrap up on the exteriors are going to wrap up quicker. As we're waiting for the turnover and to get more vacant units. But yeah, that in itself, took a lot of planning as well. We started planning for it in the beginning of October, and we didn't close to the end of November. So, just getting everything lined up so that we didn't waste any time. As soon as we closed, we got started. And yeah, I mean, I think if you discount the holidays, completing that project within 5 months is pretty good.
That's very good, because this is over 5 properties that we're talking about here, right? So the way you tackled it was doing one property, making sure it's complete, and then going to the next property, making sure that one is complete, or were there like stages that you did across all 5? At one time, and then you kind of did it like in stages. How was like your overall strategy there?
Yeah, no, it was all done simultaneously. A lot of manpower, and not just counting on one crew to do everything. I mean, we had several different crews for, let's say, exterior paint. We didn't just have one crew doing the exterior paint, because then they would have to go from property to property. We had several different ones working at the same time at different properties. Same with the interior units. Interior units, I think in total we've got maybe, it's like 15 to 20 crews working at the same time. So that takes a lot of management and site supervision. And that's kind of where JNT comes in. If you were to try to do this stuff in-house, the piece you're missing is the management of the crews, and making sure they're doing what they're supposed to do. To keep 20 crews in line is difficult. Yeah,
I can imagine that. What about the materials, right? This is JNT Construction that's handling all 5 of these properties. Pretty much at the same time. You're not going to go down to the local Home Depot, and at least I would imagine that you wouldn't. So where are you getting your materials from? How does that aspect of the business work in here?
Yeah, so we have storage containers on each site, and then we're getting the materials from. We started with Home Depot, not going to Home Depot. Home Depot has a specific division for multifamily, and their pricing is decent, but their delivery has not been the best. So as of late, we started using maintenance supply, which I believe is now owned by Lowe's, and their delivery has been better. So we deliver in bulk. We put them into our storage units that are on site, and then we grab them, as we go. We don't like to leave all the materials inside the units in case, theft. But yeah.
Okay, good. Yeah, so I was just kind of wondering because they're getting a lot of skill there, right? So many properties, so many units, and you're able to get things in bulk. I've seen some guys, get their materials, their products, from like even overseas, right? And I was kind of just wondering, if you're still getting it here locally, or were you getting it maybe like from China, right? Because a lot of these guys, some of the guys out there will go to China if they're doing like just mass projects, right? Or they've even built their own companies doing that, right?
Yes, and I've looked into it. I don't know. I haven't felt the savings is enough for me to make that jump.
Yeah, you're not seeing the justification for that just yet. Okay, great. So these products are pretty much wrapped up on the exterior. You're still working on the interior. What are you projecting to get on average as a return? What's your projection? What's your upside here that you're projected to get across?
Yes, in our pro forma, we had projected on average around $50 rent bumps, but what we've been getting is more between 75 and 100, which is what we thought, but we were being conservative.
Yeah, no, that's definitely a big jump. Double what you thought. So that's always a good thing. Same thing with some of our properties. We have a pro forma at a certain number, and then we're able to get much higher. I mean, that's like the best feeling in the world. Whenever you're able to get even double what you think. I love that. So, besides these properties that you have here in Houston, I know that you're also focusing on Oklahoma. Are there any other markets, any other states that you are considering as well?
Yeah, I mean, we're definitely targeting Texas and Oklahoma the most, but we've looked quite a bit into Little Rock, Arkansas. We haven't been able to land a deal there yet. We've been highest and best a couple times. We're open to Florida, not South Florida. I just don't trust South Florida.
Too much volatility there, it seems like. Right?
Yeah, man. The economy
it's a high ups and then like lows in that market for whatever reason. I think if you're speaking about Florida, I think it would have to be northern Florida, northern or central Florida. Their own triangle that they have in Florida, Jacksonville, Orlando, and Tampa, right? Somewhere in that triangle. But yeah, I would have to agree with you on that South Florida. It's just too much volatility, it seems like, in that market.
Correct. And then, kind of I think the same as a lot of the investors right now, but, Georgia, we're definitely open to Georgia. We've looked into Tennessee, some cities in Tennessee, and then the Carolinas. But so we're open. We're open to other areas. It's just focused a little more on
opportunities.
Yeah,
finding the right opportunities is the reason why you would even break into another market, right?
Correct.
Okay, so speaking of these markets and speaking of finding and looking for acquisitions, how aggressive are you right now? There's a lot of people that are on the sidelines. They're kind of waiting to see what unfolds and see where the chips fall. Are you in that category where you're kind of waiting and you're just kind of looking, but you're not aggressively underwriting and aggressively submitting offers, or are you aggressively looking and submitting offers? Which category are you in and why?
Yeah, I mean, I don't want to say aggressively looking, but we definitely have not stopped. We know there's going to be some opportunities coming. We're seeing some of them already. We've gone back to some deals that we lost and kind of checking in on them. One of them, the buyer did fall through, so we're trying to negotiate and get it under contract. And then as far as somebody bringing me a new opportunity, we're just being very critical when that happens. I want to know why the seller's selling. If it's a seller that doesn't need to sell and their pricing is not going to be realistic right now. I know that 100%. So I'm not going to waste my time. Now, if there's a situation, their loan is coming due, something else happened where they need to get the cash out, I'll look at it for sure. The hardest piece right now is the debt, finding the correct financing, because the deals we're looking for most likely are going to have to be a bridge loan if there's a situation. So the bridge loan market right now, it's bad. There's not a lot of lenders lending. So that's been probably our biggest struggle. We've been talking to local, regional banks, you name it. We've been talking to different lenders every week.
Yeah, that's one of the downsides, and trying to be a little bit more aggressive and trying to find a deal that makes sense and take it down is obviously the lending side. Those guys, they're going to bring 70 to 80% of sometimes a little lower, 65%, especially in this market of the capital. Then you got to make sure that these guys are on board. And the unfortunate part about being in a recession, which we are in, is that these guys kind of pull back. And yes, there could be opportunities, but if you don't have these guys on your side as your partners, then it just makes it that much more difficult, right? Having said that, if you are continuing to look for those opportunities and continue to knock on the door with these lenders, and there's always lenders out there, but just a lot less of them, right? So you got to find those ones that will be lending on the bridge side. So yeah, good there. So you had been able to grow. 1,700 units on the GP side, approximately. You have your teams in place. You've been able to grow your construction company, and also your multifamily investment company, Elevate Commercial Investment Group. And so you've been able to put these systems in place, people in place. What has attributed to that growth in such a short period of time, right? I know that you started your construction company a little earlier than you did your multifamily investment company, Elevate, but still, 3 years or so, you've been able to grow to 1,700 units. There's guys out there that takes a lot longer for those guys to get to that certain level. And certainly, there have been guys that have done it much quicker. But this is very, very high level here that you've been able to accomplish. So tell us a little bit more about that. What do you attribute to your success, up until this point?
I think it's, when I decided that this was what I was going to move forward with, which was multifamily, I decided that I was going to do it with a team and build a true company versus, just myself. And I believe that's what's allowed me to scale, is to actually have a team and to start putting systems in place from the beginning, versus, which I've done with other ventures in the past, is kind of build it up as much as I can handle myself, and then start putting in the teams and the systems, and that just becomes messy and more difficult. So I decided from the beginning I was going to build it right, and I believe that's what's allowed me to scale and get to where I'm at now and continue to grow.
So leveraging systems, leveraging teammates, that's okay. Got it. And it's difficult, I guess, for a lot of us to understand what that means, right? Yes, leverage people, leverage systems, but it's not until you actually start to put it together yourself, that it makes sense, right? High level speaking, yes, leverage others, put in systems, and over time you'll continue to grow. But until you actually do it, for those of you listening, until you actually do it, then you're not going to see exactly what he means. You have to take the action yourself as well.
It's a lot of work, man, to create the systems and
I bet, it's not easy. It's not something that just happens overnight. Look, it's taking you 3 years, and even at that, I bet it was a lot of work in those 3 years, right? Whereas we on the outside look at it, it's like, hey, it's only been 3 years, it's not that bad, right? But that's a lot of work and effort that you put into those 3 years. I guarantee you that. And for other people, it would have taken 5, 6, 10 years. So kudos to you on that, man. So. Yeah, it's time for our Nuggets of Wealth, George. These are questions that we ask every guest every week, and hopefully they are able to help out our audience. Question number 1 is, what is a good source or platform that you use on a daily basis that can also help others? And we were just talking about systems, so maybe this is a good time to ask this.
You cut out a little bit. You said social platform?
Yeah, what is a good tool, source, or platform that you use almost on a daily basis that can also help others?
Man, there's a lot of them. I guess our CRM has been pretty helpful. So we use ActiveCampaign, which is our CRM and our email marketing in one. And getting the team to use it all together, it's big, versus using like a spreadsheet to track deals or investors, etc.
Okay, so you use a regular Excel spreadsheet, is that fair to say?
We used to. Now we use ActiveCampaign.
You said for keeping track of, like on a spreadsheet side. What do you use for there?
Well, we replaced like a spreadsheet with ActiveCampaign. So versus.
Gotcha.
Yeah.
Okay, so you replace your spreadsheet with the ActiveCampaign, which is your CRM and your marketing all in one. Got it.
Correct.
Okay. Which book are you currently reading, and which one has had the biggest impact on your life?
So biggest impact, it's probably been. Oh man, business-wise, EMyth, personal development-wise, Can't Hurt Me, and what was the other question? Was there another question?
So which one are you currently reading, and which one
am I currently reading?
Mm-hmm.
Man, I'm not even sure what I'm reading. I've got so many audiobooks.
Yeah.
And sometimes I bounce around, which I shouldn't, but what is this? Oh, Dare to Lead. Dare to Lead. Okay. Yeah. I haven't heard of that one. It tells a little bit more about that one. So EMyth is, for those of you out there listening, EMyth is pretty much a blueprint of what you should and shouldn't do when it comes to business, and building your business. And it's just a lot of the foundational blocks in EMyth, right? Great book. I highly recommend it. For those of you looking to build your business. Can't Hurt Me. I'll elaborate a little bit more on that one. That's David Goggins. He tells his life story pretty much of, his struggles, as a child, his struggles even as an adult, how he overcame it. And also, a lot of it, what he talks about there is that your mind is so much stronger than you believe. And your body, it can take you so much further than you believe as well. So it's just a highly inspirational book that everybody must read, no matter who you are. I suggest the audiobook too, man, because after every chapter, how he goes into it. You're right about that. The audiobook, it's sort of somebody reading the book, and then he's there listening. And then, the guy that's doing the narrating, he'll pause there for a little bit and ask him, just randomly, like, what were you thinking in this particular situation? And why did you do this? Or why did you do that? And then so David himself would answer it. So highly recommend anybody to listen to that book, man. It's gold. It really is. Dare to Lead. I haven't heard of that one. So I guess you can explain a little bit more about that one. Yeah, it's just a different way to lead a team than your, ordinary. It's becoming more vulnerable to your team and leading in that type of aspect. I haven't gotten through that much of it, but that's kind of what I've gotten so far is just sharing more with the team and leading in that aspect, and not so much the old school way of leading, which is almost by what am I trying to say, like
By forcing people to
by
do
fear
things
or
forcing people to do things that you wouldn't have otherwise done, right? You're making people do things that they're not comfortable with, and you wouldn't do either. So lead by example, pretty much is I guess it's something.
Pretty much. I mean, there's a little more to it. I'm probably not doing it justice right now, but
No worries. Okay, good. You did talk a little bit about this earlier when you talked about systems and having strong team members as well. But what was the best business advice that you have ever received?
The best business advice I've ever received is hire others that can do whatever aspect you're trying to fill better than you.
Okay. Hire others better than you. Okay, so it's
Pretty much, and in that aspect you're trying to fill,
Yes, got it. Okay, good. What are your rules for success? So you can give me one, you can give me two or three. What are your top rules for success? For anybody out there listening, what do you have to do to be in a position of success?
So I just answered these yesterday on another podcast, and I'm gonna keep it the same pretty much because I think it's to me it's very important. I think number one is focus. There's a lot of noise out there, a lot of different things you can do within real estate, within multifamily. There's a lot of different things you can do. Find out what it is that you want to do, and then focus on it, conquer it, and then possibly add some other streams of income and whatnot. But without that focus, it's going to be difficult. And then number two is don't be afraid to get uncomfortable. I mean, a lot of good things happen when you put yourself out there, and it depends on how you define uncomfortable, and it depends on the person. Me personally, I used to not do a lot of networking. I used to feel uncomfortable doing that. Something like this, podcast interviews. I would never do this back then. But at some point I decided for me to get to where I want to get, I've got to do these things. And I just started doing it. Every day I test myself and I make sure I'm doing something that makes me feel uncomfortable.
I love that. Yes. And that's one thing that I try to implement as well. And first of all, number one, focus, that's gold as well, because it's so easy to get distracted nowadays. There's so much content out there on all the social media platforms, just on the internet, and you can make money so many different ways, right? The reason why you're looking to maybe do real estate is because obviously you can make some money. There's a good way, you can make a good living, passive income, whatever, right? But focus on one aspect, and then once you conquer that, then you can add in others. Don't be afraid to be uncomfortable. That's huge. Same thing with me. I was a little uncomfortable, just being out of my comfort zone, right, all the time. But like you, if you realize that it's not that bad once you do it, then it's like, what the heck was I afraid of, right? This whole time I've been holding back because, what people are going to say, how am I going to react, what am I going to do, or am I going to do something wrong? But then you do it, it's like, nobody's going to judge you, right? We're all different in this world, and that's what makes the world, awesome. So just do it, right? But I agree with you on that as well, that every day you should do something to make you feel uncomfortable, right? Every single day, if you haven't done something that didn't make you uncomfortable, then you didn't do enough. Right. So that's kind of my little, motto that I go by. And you'll find at the end that, you're doing things that you look back, 2-3 years ago, it's like, man, I can't believe I'm doing this now. And 2-3 years ago, I was like totally different person. Right. So
it's funny, man.
One, number two. And so was there a third one that you wanted to introduce?
No, I was just going to talk about that second one again from some of the things that you said. But it's funny, like my biggest fear before I did that actually ended up being what resonated with others. So the feedback I got when I started doing Facebook Live videos, or I started getting in front of people more, was I like how real you are, and how, sometimes you mess up, or you don't, it just comes off more real, versus my fear was that, when I do public speaking or whatnot, it's not perfect. But apparently that was what people liked, was the fact that it was not perfect.
Exactly. So be yourself, be genuine, and it's like me on the podcast. A lot of times I don't say something right. Something comes out a little wrong, but that's okay. That's what makes everybody human, right? Not a professional in every single aspect that you do of your life, right? You just try to do the best, and that's it, right? Do your best and add value. That's the biggest thing, right? The most important thing. Okay, so that was number one. Number two, is there a number three, or is that just those two?
I mean, I could add another one. I could throw something else in there. Find where you add value. You just said add value. So find where you can add value to another group if you're just starting, and come to them with that and add the value versus. So I have a lot of people that come up to me and kind of they want to get involved, and they don't say where they can add value. They're kind of just like just there. They don't really say anything. But then I've had others that come to me and they tell me, hey, look, I'm really good at this, and this. Is there any way I can help you? That makes it a lot easier. And it's kind of the same thing I did. I realized that with my construction background, I can add value to other investors or come into a deal as a co-GP with that experience. And that's how I started. So
I love that, because I think everybody out there has something that they can add. And all you have to do is dig a little deeper, understand your background, just study yourself, kind of look at as if from the lens as if it was somebody else looking at you, right? What are you good at? What does your network look like? What experience do you have? What skill sets do you have? And I'm telling you, everybody has some kind of skill set or some kind of value that you can add. But you got to dig a little deeper and understand what value that is, and then present it to somebody else, right? And that's how deals are made. That's how partnerships are formed. That's how you're able to grow. But just by simply saying that, hey, I want to be a part of a deal, I want to do this, and without making the other person understand what it is that you can bring to the table, then Correct. It's not going to get you too far, right? So that's I think everybody out there has some kind of value that you can add. Just dig a little deeper if you don't understand what it is right now, but you have something. Trust me, you have something. So, okay. Where do you see your business in the next 5 years?
Next 5 years. I'm definitely want to continue to focus on multifamily, try to get, I had originally said I wanted to have 10,000 units under management by the end of next year. COVID may have thrown a wrench in that. Maybe not. I don't know. We'll see how many opportunities come our way. But, if we skip over to 5 years, I would say definitely want to have over 20,000 doors under management. Probably bring in property management in-house and continue to grow on that end. I'm looking to build some a legacy, so I want to continue to grow.
Good. Those are some big goals, and you know what? One thing that I would say, because I set some pretty crazy goals myself. One thing that I always tell myself is, if for example 20,000 units in 5 years, if I get to 15,000 units, I mean, is that a fail? No, that's fantastic.
Yes, you failed.
So yeah, like if you can't get all the way, and if you get just a little bit lower than that, then that's just as good, right?
Yeah.
So I think those are some really big goals, and you know that saying that they say out there, if nobody makes fun of your goals, then they're not big enough, right? Because if you would have said I want to get 200 doors, then nobody's gonna say anything because it's realistic, right? But if you say 20,000 units, then people might see something like, how's he gonna get there? That doesn't make sense. And because those are big, right? Those are really
right.
big, and it's not. It's much higher than most people are accustomed to thinking, right? So I like that. That.
Little 10x in there.
Yeah, a little 10x, right? There you go. That's more like 20x. At the end of your life, how do you want to be remembered?
How do I want to be remembered? Man, that's a good one. Family's number one to me. I mean, the reason I do this day in and day out is for my family and to give them more than what I had. So definitely one, I want to be remembered as a good family man, and hopefully at the same time a good business owner, you know, to my team. My team is very important to me. I care about them a lot. And yeah, I guess those two things, man.
Good. Thank you for sharing that. Okay, so last but not least, where can Committed Wealth Nation go to contact you and find out more about Elevate Commercial Investment Group or JNT Construction?
Yeah, they can go to website elevatecig.com. They can find a free ebook on there that goes into details as far as multifamily investing. And then as far as the construction, they can go on to JNT Construct. So it's CONSTRUCT.com. And if they want to go ahead and email me at Jorge, Jorge, at elevatecig.com. I've got a couple free checklists for due diligence. And I've also got questions to ask a sponsor that I'll send over to them.
Okay, nice. So you have a free checklist and then some questions to ask your sponsors, their possible sponsors.
Yeah, if you're going to invest passively.
Okay, good. Okay, well then, thank you so much, George. Man, I really do appreciate your time. I appreciate all the value that you've been able to share. From your construction background to the markets that you're focusing on, to the deal that you just closed on, just recently into the last year, and then also sharing, a lot of your nuggets of wealth, right? Your CRM and marketing ActiveCampaign that you use, the books that you've been able to share, just a lot of good information that you shared with not only myself but also my audience. So thank you very much for that, George, and yeah, I wish you continued success.
Thank you, Juan. Can't wait to hang out with you again, man. When this is all done.
We're gonna make it happen soon. Hopefully it's hopefully this COVID-19 is over here soon, or we have herd immunity here pretty soon, man. We need to get over this hump. But yeah, we'll definitely be connecting again shortly.